Welcome to Motley Fool HQ. I'm Dylan Lewis. I'm going to be your host today. I'm joined by analysts Emily Flippen and Bill Mann. We're going to be talking all things China on this broadcast, breaking down the story over the last couple of years from a macroeconomic perspective, some more recent developments with the trade war, and of course we're going to be talking about some stocks that people should be putting on their watch list. We can't do a broadcast without doing that. And of course, if you are looking for some stocks to get started, we have an investing starter kit. You can get that over at fool.com/start. It's free, 5 stocks, great for beginners. Let's get started with this China discussion. And I think one of the things that is kind of interesting with China is for a very long time, there was a crazy growth story going on. We were seeing double-digit GDP growth in China. That kind of slowed a little bit after the financial crisis. We're seeing things in the single digits, but there have been a lot of big macro stories with this country. What have you seen, Bill?
Well, I mean, China, to me, is the greatest growth story that has ever happened. What they have done from 1970 until, call it 2015, was unprecedented, bringing 12% of the world's population out of poverty and into, into at least middle class. It's really, really amazing. But they did it as an export economy. Everything in China, everything that China did was geared towards exports. At some point, you cannot grow at 12% if your export targets are growing at 3 and 4%. Like, those numbers become hard. So China over the last few years has been quite aware of this and has been trying to bring up and incentivize domestic consumption. And they've succeeded to some degree, but I mean, I think it's pretty clear that this is a much harder thing to achieve than even what they've done to date.
You mentioned the kind of demographic shifts that we're seeing. Another big narrative with China is this idea that we have a rising middle class. We have purchasing power increasing in the country. Has that narrative held? I mean, is that something that you guys are continuing to see, Emily?
Maybe not when you look at GDP growth alone, but I think when you look internally in China, you see a generation of people that have a stronger proclivity to spend as opposed to the generation before them. So my favorite generation to look at in China is actually the Generation Z. So that's the generation right after millennials. And we see this generation spending more and more money on stuff that generations before them never spent money on. So VAS revenue is a big driver of revenue for a lot of Chinese companies. That's value-added service revenue. This is a type of money that's—
I'm glad you defined it.
It's always good when you throw an acronym out there, right?
This is a type of revenue, though, that's going over live stream. So you're watching live streamers, you're sending them virtual gifts, virtual monies, in-game currencies. This is the sort of stuff that we see younger generations in China actually spending a lot more money on. So while maybe the GDP growth hasn't been there in the way that we've expected it to, or the international scene has expected it to, there's still a lot of growth happening internally.
I think it's probably one of the more difficult things for people to wrap their heads around as they are looking at, what companies will win in that marketplace, because the digital gifts culture is a lot different. It's much bigger there. And
it's entirely different.
Yeah, and so many of the big businesses are these digital businesses, these social media companies like the Tencents of the world that are connecting people, and they really have kind of unparalleled access to their communities. I know you follow a lot of these businesses, Emily. It's kind of hard to equate what we know here as Facebook to a Tencent, because it's not just Facebook in the sense of social media. It's so many other things brought into that app.
Yeah, and I actually think when you talk about Tencent, you're really talking about WeChat, which is, when people think about Tencent, they think about being the largest gaming company, largest entertainment company. But the real power of Tencent is the ability that they have to centralize eyes. And so you see that with big companies here in the US, so Facebook and Google, we see them having antitrust suits, simply because they are the people that centralize users, centralize clicks. And in China, that all comes down to WeChat, and that's because you can do so many different things that you can do on WeChat that you could never dream of doing in app space here in the US. So the idea that innovation has somehow stopped just because GDP growth has slowed down can't be further from the truth. Think about the most downloaded app in the world right now. I believe it's TikTok. And people in the US, I'm going to talk about TikTok, but people in the US may not realize that's a Chinese company. It was launched in China far before it was launched in the United States. So the fact is that that's a completely different app, has a completely different structure than anything we've seen here in the United States. And it was a Chinese company that launched it. We see a lot
TikTok is the short form videos, almost like the same way that you would consume Twitter, very short form.
You can think about it kind of like Vine. Anyone that's
a little bit like
familiar
Vine.
with
Gosh, I love
very
Vine.
similar, short form video content.
It's like Chinese Vine,
but a very highly viral element to it, right?
Exactly, and it's not just that. We see that happening with e-commerce business models too. So a popular company, it's been on a total tear recently, is Pinduoduo. The ticker is PDD. This is an e-commerce player. It's the second largest e-commerce company in China, and it's centralized essentially e-commerce through group purchasing. So you get up together with people all across the country, and you get the power of 1,000 people want to purchase this. You get it at a lower price than just one person purchasing it. And look, we don't have that in the United States. And so the idea that just because economic growth maybe isn't what it was 10 or 20 years ago, that somehow innovation and growth has stopped in the country couldn't be further from the truth.
It's a really interesting way to think about it. When you think about growth, there's two types of growth. And we've seen, you can go on a company by company basis. You can have really inefficient growth, right? Like you can have growth for growth's sake. And in some ways, China did that for a bunch of years. Like you would go to Shenzhen, just north of Hong Kong, and you'd see new factories being built all the time, but then the factory that had been built a couple years ago was still sitting empty. Maybe it was not the right type, maybe it had been occupied and then, and then they left. I think that what you're seeing in China now is in some ways some, efficiency gains that come at the expense of top line growth, where growth is growth for growth's sake is going to end up overheating their financial system. Whereas, efficient return on invested capital driven growth, even if it's a lower top line number, will be better for China.
We mentioned slowing growth a little bit, and I think we do need to state the fact. I mean, GDP growth is still like 6 or 7%. We are not down to some anemic growth, depending on the numbers.
People talk about China slowing growth, and like, are you kidding? Right? Like, our president would chew his right arm off to get a 6% growth. So it's definitely, as I said at the top, what has taken place in China is so impressive. There really isn't, there isn't something that you can compare it to in the history. The amount of economic value that's been created.
I think what's kind of confusing for people, though, is it seems like a lot of the big macro theses that people have been banking on when they've been buying Chinese stocks have held, right? Purchasing power is going up. We're still seeing GDP growth, which is awesome. And yet, the Shanghai Composite Index, I think down 40%, something like that, from over the last 5 years. And a lot of major Chinese companies are well off of their all-time highs. So even with what seem like really awesome tailwinds, some of these businesses are still struggling.
Yeah, and it's funny because it's almost a catch-22 if you're a Chinese company, because you can choose to list on the Shanghai Exchange, right? You can choose to list in your home country, but the regulatory requirements you have for that and the amount of control that the Chinese Communist Party has over that, it really incentivizes you to list elsewhere. But you list in the United States, and because American investors right now are so trepidatious, to use it lightly, about Chinese companies, it's much harder to prove yourself as a Chinese company in the American markets, especially given the contentious history that Chinese companies have had being listed in the U.S. market. So it's a hard time right now, I think, to be a legitimate growing Chinese business because you're faced with listing on an exchange that has historically been beaten down, not a great place to put your money, versus in the U.S. where we're seeing even the big names now, so Baidu, Tencent, Alibaba, really being hammered.
You have to keep in mind that the Shanghai stock market is, as much as anything else, a political tool. It's not, you can't look at that stock market and say that it's the same thing as the New York Stock Exchange. It's not the same thing as the S&P 500. Both the banking system and the stock markets in China are, in some ways, extensions of the political system. I mean, that's just reality. When the market started dropping several years ago, the government just stopped, like no more trading, right? Like, and put a bunch of money into, backed companies. So yes, the Shanghai Exchange is down substantially. I think a lot of that is driven by the fact that people are aware of the fact that it's a little bit, I can call it a rigged game in live video, but like it is rigged in a way that, that the US stock market and Western stock markets are not.
I think political interests might be the perfect segue for us to talk a little bit about what's been going on with the trade war with the United States.
Haven't heard anything about it. Wait, what?
I don't know if you've heard. And the back and forth that we're seeing with this tit for tat on tariffs. Bill, I know you've been following the story quite a bit. What are you making of it at this point?
It's a really bad news for China. Like it's not so bad news for the U.S. Chinese imports into the U.S. really account for about 3% of all GDP in the U.S., which is a big amount. It's 23% of our imports, but only about 3% of economic activity. The U.S. will be fine regardless of the outcome. Like, it might not be comfortable, and we hear every day, companies are saying that they're feeling the pinch, but ultimately, this is much bigger stakes for China than it is for the United States. And we have, President Trump has really, he is focused on this. This is a bread and butter issue for him, and he's got an incredibly strong negotiator in Robert Lighthizer as the U.S. trade rep who is going after Chinese companies and Chinese interests in a way that's really uncomfortable for China. And you're starting to see U.S. businesses move outside of China and come to alternate sources for a lot of the same goods. And so it's bad for China the longer this goes on.
We're going to be taking questions from the audience watching live in a little bit, but I'm going to anticipate, I think, one of those questions, because with the trade war, we see all these scary headlines, and we see the volatility of the market just start acting up. Emily, when you look at all of that, how are you thinking about that from a personal investing perspective and just the kind of stuff that we want to remind our members of when they see those types of headlines?
Panic! No, I'm
Exactly.
sorry.
Put everything in bonds. I'm joking. Obviously, don't do that.
Yeah.
I will say that if you do choose to buy Chinese companies, and I think Bill and I are both still comfortable with buying Chinese companies, you need to remember that you have to understand the macro environment that we're in. So we'd be amiss if we did not talk about what's happening in Hong Kong right now, for instance. And looking at it from Trump's perspective is one thing, but looking at it from China's perspective is a totally different thing.
Yeah.
Exactly.
Much more
so you
important.
wonder why we haven't come to some agreement with the trade war, and you can look at what's happening in Hong Kong and how important it is for China to come off as a strong power. We see people in Hong Kong waving American flags. And if you think that that's going to be conducive to solving a trade war anytime soon, you'd probably be wrong. So if you do choose to buy Chinese companies, and like I said, we're invested in Chinese companies, so it's not something that I think long term is going to be an issue. But I do think it's probably going to take a change of administration, either on the US side, more likely, very unlikely on the Chinese side, for some sort of solution to come to a head. So with that in mind, if you do choose to invest in Chinese companies, be aware of that. Be aware of the fact that because of these macro events, these companies don't tend to trade as logically as you might expect that US-based companies do. We've seen lots of great Chinese companies post pretty amazing numbers over the past few quarters and get absolutely hammered. So you should expect that volatility. You should come in expecting to lose upwards of 40 or 50% of your investment because of a tweet. And just understand that you're in it for the long term and you're buying and holding that investment.
So before we hopped into the studio, I wanted to have both of you guys prepare a stock that you think people should have on their radar as a way to play China. Obviously, there's still growth ahead with all of the caveats that you just mentioned before. Bill, you have one that I think is probably a fairly familiar name to a lot of people.
Yes. A lot of people probably don't know that Yum Brands completely spun out its China operations a few years ago. So it's about 9,000 stores between Taco Bell, really KFC, help me out here, Pizza Hut, and then they also have some Chinese brands. They've got a coffee brand, and then they've got a hot pot brand. Yes, that's right. Yum Brands opened hot pot restaurants in China, and they've done really, really well. It's called Little Sheep. And so fabulously run company, and it's run, one of the things that I'm always really nervous about with Chinese companies is the verification of accounting is so hard to do. And in some ways because the government actually puts up impediments that prevents outside accounting firms from really doing a thorough accounting job. But Yum Brands China is under the same umbrella that Yum Brands is under, and it's a fantastic growth story. They've got it. They've really got it right in China, and so I think that is a rather conservative way to play an excellent market.
It sounds to me like that's a way to play China while having some of the creature comforts of being a U.S. investor.
Yeah, which is something that I really seek out. I mean, one of the things that I'm mindful of is during the last huge Chinese bull market here in the U.S., some of the reasons that a lot of people's money disappeared was because the government made it really hard for us to do verification. So you have to keep in mind when you're talking about Chinese equities in general that you aren't necessarily you aren't necessarily afforded the same investor protections that you are in almost any other country in the world, and that's just reality. Now, Emily said it, earlier. We still both are invested in Chinese companies, but but getting way out, like taking huge risks in Chinese companies, I think is probably a little bit, you're putting a little more at risk than you think.
Okay. For folks that are interested in a maybe purely Chinese name, not something that has been ported over to the Chinese markets, Emily, you have a stock for us as well.
I do, and I guess to counteract all of Bill's totally logical, totally sane explanations, I'm going to risk it for the biscuit. So if you are looking to risk it for the biscuit in China, I have a great company. It's a company that actually works with a lot of American companies, so I guess it has a little bit of creature comfort in that regard. But the company name is Baozun. The ticker is BZUN. Baozun is an e-commerce aggregator in China. It's often referred to as the Shopify of China.
Not quite right. Yeah.
It's not quite right. It has not quite appreciated like Shopify has either.
Yeah.
But it does do a lot of similar actions in the sense that it organizes and distributes companies' e-commerce presences in China. So when you think about being an American brand or being a foreign brand coming to the Chinese market, trying to advertise, trying to get consumers there is totally different than the way that you do it here in the US. So Baozun does a great job in kind of centralizing their presence, attracting customers. They always post great Singles Day numbers. So coming up into November, definitely keep an eye out for Singles Day. That's 11/11 in case anybody was wondering.
The largest shopping day
Largest
for anybody
shopping day.
on Earth.
Yeah, on
Right.
Earth, of
Yeah.
course. So Baozun always posts great numbers. They do a lot of gross merchandise value during that day. But even amidst this really big trade war, this trade war that's gone on a lot longer than investors and I think consumers have expected, Baozun has continued to grow. And it's really impressive because a lot of their growth is attributable to international brands wanting to reach the Chinese market. So I kind of like it because it's a company that's performed really well, beaten expectations, raised expectations, even amidst slowing economic growth and an increasingly hostile trade war. So it's a great company. It's one of my larger personal holdings as well.
One of the nice things about Baozun is that they've got really we as investors have really two insurance policies with Baozun. One is that they are doing business with really large multinational brands. And so the multinational brands have no interest in involving themselves with any type of partner that is going to embarrass them, right? But the other thing is that we're not counting on these international brands to go in China and succeed themselves. I mean, Baozun is in some ways a protected company. And yeah, I think it's, I own it personally. It's in the Global Partners, portfolio. It's a great company. It really is.
All right, we're going to switch gears and do live Q&A with the folks that are watching this broadcast while we're live. So if you have any questions, make sure you're dropping it into the chat box. I am going to kick us off, though, with questions that came via comments on some of our other YouTube videos.
Oh, that's exciting.
Yeah, right? Nice
So
little,
now we're going to talk
nice
fashion.
plug there. No, they're related, I swear. And so the first question, I'm seeing a lot of foreign stocks that you guys talk about are ADRs. What exactly is an ADR and how does that differ from a normal stock?
So it's a great question. Functionally, they differ very little. You can buy an ADR or you can buy a stock, and it's just a U.S. stock, and it's exactly the same thing functionally. Now, technically, what an ADR is a secondary listing for a company that's listed as their primary listing somewhere else. Most Chinese companies that trade in the U.S. are not ADRs. They are direct listed here because they don't have a listing in China. But so really the only differences with ADRs with ADRs is that there's a small fee involved that goes to usually Bank of New York. Good business for them. But sometimes you don't get the same level of voting rights. But that's literally the difference.
And to Bill's point, if you use an acronym, we should probably say what it means. ADR stands
Thank
for American
you. Yes,
Depository
well done.
Receipts.
I agree. American Depository Receipts. And there are other types. I mean, there's GDRs, which are, Great Britain Depository Receipts. It's not just in the U.S., but the U.S. being the largest market in the world, foreign companies that would like to raise capital here have to do so via, with an ADR listing.
All right, and we're going to switch over to some of the ones from the live audience. Our first question there, Todd asks, which Chinese stocks should we sell short? And I think what's maybe bringing this question on is we talk about some of the big declines that some of these companies have experienced recently. Maybe there is a certain interest in doing that. I know personally, I tend to stay away from shorting anything. The risk reward there is a little lopsided and something that I don't quite have the stomach for. I know that's the guidance that we tend to give newer investors. Anything to add there?
I wouldn't short a single Chinese company unless you had specific knowledge that it was a fraud, right? And it has to be specific knowledge because you're talking about a growth market, right? And anytime you've got a company that is within a growth market, even if the company stinks, they still have a pretty good tailwind, right? Chinese companies are going to fail. American companies are going to fail regardless of the economy, but the companies that are Chinese that are listed on the U.S. stock exchanges are not, generally speaking, fly-by-night operations.
Yeah, and I think one of the things that sometimes gets lost in the shorting conversation is you're betting against the overall movements of the market, right?
Yeah.
Especially
in
the
a
U.S.
specific time period as well.
Right, and you don't want to be bound by time. Time is your friend. Go along with time. Don't worry about being right at a specific period in time.
Yeah, my big preference for shorting is look for really large companies that have sort of terminal issues. Like I wouldn't get out of, I would not spend too much time. Like unless you really want to, like if you're really interested in figuring out that a company is a fraud, I guarantee you there are some companies that are in China that are, that are defrauding American investors, like right now. But just because you figure it out doesn't mean that that you're going to get away with it.
Yeah, you have to be right, and then the market has to realize that you're right.
You have to be right. You have to be right at the right time. The market has to realize that you're right in that specific time frame. And most of these Chinese companies that you'd want to short, their float's very small, and any short position that you take would be in a very expensive short position to take as well. So you're paying a lot
point.
to open up that position. It's not a good idea.
So it's a long way of saying there's a lot of things working against you by trying to short any Chinese stocks. We have a couple people asking if there is a recession, and I guess this question is kind of geared towards a more global recession. Who would take a bigger hit, the U.S. or China? Perhaps both around the same time. It seems to me like the answer may be both because we're at a point where things are just so interconnected. But I'd love to get your take on this one.
I love the fact that people don't realize that the global economy is already in a recession. I mean, we are. I saw this headline not that long ago. The U.S. is the least worst economy in the world right now. Like we are doing, but nobody else is, right? So I think it depends on what type of recession it is. If it's a banking recession, I think the U.S. is in for it. If it's not a non-banking driven, it's simply because the Chinese banks are somewhat isolated from the global economy. If it's a manufacturing recession or a spending recession, China's in for it.
Well, here's the thing. Because China does have a centralized economy, there's a lot that the Chinese Communist Party and their leadership can do to stimulate the economy that we don't get here in the U.S. Now, I'm not saying that's a good thing over the long term.
It's just an is.
It is and is. And so they have a lot more levers they can pull to re-stimulate the economy than we do here in the United States. That being said, I think recessions don't tend to happen on a global scale unless they come out of the United States. So I do think that if we see something like we did, in 2008, 2009, then it's probably going to hurt the U.S. stronger than it hurts countries like China.
It is true that right now, just straight by the numbers, the United States has the most expensive stock market in the world. Like just on a price to sales basis, price to earnings basis, book value, we have the most expensive stock market in the world. There are reasons for this. I mean, it is the most trusted stock market in the world, but you do have to keep in mind that whenever something is expensive, it also comes with high expectations. So it really could be that U.S. stocks could get whipsawed even worse than the economy actually does in a recession.
So Emily, your point about political control winds up touching on something that a couple different viewers are asking, and it's kind of getting at the idea that the Chinese government has plenty of control over what happens in China, and how do you weigh that when you are looking at some of the big stalwart businesses, because it seems so difficult to separate China the government from China the very strong, almost state-sponsored company that exists there.
You can't separate them, and that's the blunt truth of it, is the fact that most of these companies, especially the larger ones, do bow to some level of Chinese government influence. So what I look for when I'm looking to make a Chinese investment, if I can accept the fact that there's always going to be that influence. For a lot of investors, just trying to accept that fact is too much, and that's fine. You shouldn't be adding Chinese exposure. But what I do is I look at the Chinese 5-year plan, what the government hopes to accomplish over the next 5 years, over the next 10 years, and I make sure that that company plays into that somehow. So we don't see that the Chinese government is going to significantly hurt companies like Baidu or Tencent. Now, they could change gaming regulations, which could momentarily hurt Tencent, but Tencent's not going anywhere because it's such a strategic company to the Chinese 5-year plan. The same is true for China Mobile, the rollout of 5G in China. That's something that's extremely important to the government. So when I look for companies in China, I look to make sure that they're not going against what the government has already said they hope to achieve.
Do you know about the social capital ratings in China?
Oh, yep.
Yeah, so basically every person in China, and it's being rolled out, it's pretty much out, has basically a rating of how trustworthy they are.
Or they're hoping to get there. It's not
It's
quite
not. It's
there
not.
yet.
It's not all the way there, but it's being rolled out, and there are people who are out now being rated. And so, if you have a low trustworthiness rating, you might not be able to get train tickets. You might not be able to move outside of your region. You should assume you're being followed. These things exist. But what a lot of people don't know is that there is also the same rating system that's being rolled out for corporations. So in the same way that one of the reasons that the trade war are happening now is that we are 100% sure that there's been an amazing amount of theft of IP from China, over the last 3 decades. A lot of foreign companies are really nervous about this because in order to get a higher social capital rating, they have to turn over a lot of IP and a lot of internal documents to the Chinese government. So I'm not sure that it's Chinese companies that the Chinese government is looking to impact in a negative way. It's foreign ones. And some foreign companies are saying we're just not going to, we're not going to play in China anymore.
Emily, you mentioned the regulations that are affecting some of the major social media and gaming companies in China, and I think that that's actually one of the very clear similarities between the US major tech companies and some of the major tech companies in China, because it seems like both of them have kind of gotten to the point, particularly in the digital ad space, where people have started to question whether they're always doing the right thing, and the reckoning is kind of coming for some of these businesses. So some of the, I think, pinch that these companies are feeling now is the government reaching out and saying, maybe we need to be putting in some regulations here to make sure that you guys aren't just advertising anything.
That's true. We saw a few years back with Baidu, their advertisements actually caused the death of a young man in China who had clicked on an advertisement for a medical company that was not a real medical company. And this pain...
That's not what killed him. He actually got the stuff,
yes, there
right?
We
It
go.
wasn't
Not clicking on the ad directly.
They haven't come up with like murder ads or anything, but got the, bought from a quackery and it killed him. Yeah.
Exactly. And this pain is still felt amongst the Chinese consumer. So we saw recently a CEO of Baidu presenting at an event, and somebody from the audience came up and poured water over his head, and it was quickly squashed by the Chinese media. So the fact is that we see a lot of the same issues, especially as it applies to advertising and data privacy in China, but the issues from a government perspective are totally different. When the US government's looking at companies like Facebook and Google, they're almost looking at it from should we break up this company, right? Should we cause the US market to be more free, more competition? China doesn't care so much about competition, they care about retaining control in their government. So if Tencent plays well with them, they don't want to cause competition that could therefore, potentially disrupt the power that they have set up already with that company. So again, similar problems, but different execution based off the government's, purpose.
Yeah, Jack Ma, who's the chairman of Alibaba, came out, I would say 2 months ago, and he confirmed that he is a card-carrying member of the Chinese Communist Party, and it has been forever. So
it's not particularly a rare thing in China.
It's not a rare thing in China, but I think it's kind of it's a little bit of a cultural shock for Americans to think, oh well, these are the capitalists, and no, these are members of the governing body. They just happen to be in a capitalist pursuit, but they he very much is a party member, and so I think that that's probably, if you were to be able to ask the CEOs of all of these companies, it would be the same.
I think that's going to do it for this broadcast. I think we'll stop things there. Thank you guys so much for
Was that a happy place to stop? I don't know.
I'll leave that to the viewers to decide. Emily, Bill, thank you so much for
problem.
Thanks for
hopping
having
on
us.
this broadcast and joining me. And Bill, we have an international service. You're highly involved in the international service. So for folks that are interested in more international theme stuff,
Global
keep an eye out
partners.
for that.
Yeah.
Global partners.
Yeah, thank you.
And thank you to the folks that are watching live. We love having the interaction and the live Q&A. Like I mentioned, if you have questions we didn't touch on that are kind of more basic investing questions, we have that investing starter kit that's over at fool.com/start. It takes you from starting your emergency fund to buying your first stock, everything in between. And if you haven't already, please give us a thumbs up on this video. It seems kind of ridiculous, but it does help us get out there within the YouTube community. People love getting those likes. If you ever have something that you want us to touch on in a future video, drop it in the comments section below. We love getting ideas for themes for future ones. Until next time, I'm Dylan Lewis. Thanks for listening, and Fool on.